I'm recording, literally.
All right.
Okay.
How many of us are willing to lose everything? Financial statements are important as they pertain to your financial history. Financial statements are also important for many legal reasons. I'm connected to this topic because I'm a finance major, as well as I've done extensive research on the topic. First, I'll cover the types of financial statements, followed by the inclusions required for income statements, and then we'll end with the legal implications for falsifying financial documents. There are many different types of financial statements that pertain to your finances, and it's important for all of us to know the difference between them. Some of you are wondering, what is an income statement? Well, according to David Seals in his book titled Accounting, he simply refers to it as a profit and loss statement. So what an income statement is all your gains and losses and depreciation and things like that that pertain to your finances as an individual or a business. The other types of financial statements that are also important that don't pertain to individuals but businesses are statements of balance, a balance sheet, and statement of cash flows. Income statements are required by many law enforcement agencies, most notably the Internal Revenue Service and the Securities and Exchange Commission. Income statements became mandatory by the ratification of the 16th Amendment in 1913. Also, the Federal Reserve published Uniform Accounting in 1917 to establish uniform procedures and policies for generating income statements and other statements, also ensuring that they were processed in a uniform way. Now we'll talk about what's required for the income statements. For an individual's income statements, you'll need to have gains, losses, depreciation, tax deductions. But taxes pertain to many different things, such as if you're a first-time home buyer, and also businesses according to if you do tax deferments on loans, and you can also have tax deferments on interest rates. There are many different parts to the income statement that make one filling it out difficult or frustrating for many, especially if you don't have an accounting background or a finance background. Also needed, besides the inclusions we talked about earlier, you'll need all your current assets, investment income, incoming resources, debtors, creditors, things of that nature. And you can see that on your handout provided by the Post-Medieval Archaeology Limited Company that shows all their inclusions. You may be wondering, well, what can happen if I submit an income statement wrong? Or if it's not truthful or it's a falsified document? Well, usually an audit is required on financial statements, but for individuals, the Internal Revenue Service will take a percentage of people that do their taxes and do the audit themselves. But for businesses, it's usually required every quarter by an independent auditor, which means it can't be somebody that works inside the company that comes through and looks at their books to make sure they're right. But those laws differ from country to country. Also, strict fines can be levied, as well as prison time, according to the extent of the damage of falsified documents. And most notably, most of you probably remember the Enron scandal, where it was $1 billion company, but realistically on paper, when the books weren't cooked, they were $1 million company getting ready to file for bankruptcy. Also required now are CEOs and CFOs of all businesses are required to sign off on all their financial documents before they're published. And if they are falsified, the CEO and CFO are held liable for those falsified documents. These are all important factors when generating an income statement and making sure you're honest when reporting your financial statements. And there are many different statements as we discuss, which is a big reason why you need to know the difference between them as to not get in any legal trouble. Also, you need to be honest in your financial reporting because you don't want to be the next victim to the IRS to take everything